Welcome to Chapter 9 of Essentials of Healthcare Finance, Financial Statements. Start with an overview of the balance sheet, which presents the assets, liabilities, and net assets of a healthcare firm. The balance sheet presents the accounting value of assets and the source of money used to purchase those assets at a particular time. Assets are usually listed in descending order of liquidity or the ability to convert to cash. The statement of operations or income statement in an investor-owned firm is a financial statement listing the revenues, expenses, and excess or revenues over expenses, net income, of the firm in a period of time. The third financial statement is the statement of changes in net assets, called the statement of change in owner's equity or stockholder's equity in a for-profit business. Its purpose is to explain the changes in net assets from one period to the next. This statement reflects increases and decreases in net assets for permanently restricted, temporarily restricted, and unrestricted net asset accounts. Since accrual accounting is used, the statement of operations provides information about how much revenue was generated and the amount of resources used to generate those revenues. It does not reflect cash flow. The statement of cash flow is a financial statement that shows the firm's cash receipts and cash payments over a period of time. The learning objectives are to understand the four financial statements, which are balance sheet, statement of operations, statement of changes in net assets, and statement of cash flows. The balance sheet presents a record of an organization's assets, liabilities, and net assets at a specific point in time. In essence, it's a financial snapshot of the organization at a certain date. The statement of operations, or income statement, or statement of revenues and expenses, details the organization's revenues and expenses during the accounting period, typically 1 year. Statement of changes in net assets lists how net assets or equity changed during the period. Statement of cash flows describes how cash was generated and used. Notes to the financial statements provide detail on the organization's structure, accounting practices, and financial standing. It is not considered to be part of the four primary financial statements. So let's dissect a balance sheet. As you can see, our current assets on the balance sheet are assets that are expected to be exchanged for cash or consumed during the operating cycle of the entity, or for 1 year, whichever is longer. For cash and cash equivalents, the cash consists of coin, currency, and available deposited funds at banks. Cash equivalents include savings accounts, certificates of deposit, and other temporary marketable securities. Accounts receivable represents legally enforceable claims on customers for prior services or goods. You'll typically see all of those amounts that are billed out to third-party payers but not yet received listed in accounts receivable. Assets whose use is limited, typically cash and investments that can only be spent for specific purposes. Property and equipment are the investments in tangible permanent assets, sometimes referred to as the capital assets or net fixed assets of the organization. The allowance for accumulated depreciation or allowance for depreciation. Accumulated depreciation taken on the asset to the date of the financial statement. This is different than the depreciation expense on the income statement. Goodwill, the difference between the price paid to acquire another entity and the fair market value of the acquired entity's assets less any related obligations or liabilities. Current liabilities are obligations that are expected to require payment in cash during the coming year or operating cycle, whichever is longer. Current installments on long-term debt represents the amount of principal that will be repaid on the indebtedness within the coming year. Long-term debt represents the amount of long-term indebtedness that is not due in the next year. And net assets or equity is the difference between assets and the claim to those assets by third parties or liabilities. In our statement of operations, we look at net patient service revenue, and this is the revenue from patients after deductions from the gross price or the charges. Depreciation, which is a non-cash expense that represents the financial value an asset loses over some period of time. It's usually defined by the asset's useful life. Interest, the expense paid as part of debt financing. Bad debt, the amount of charges that will not be collected from patients from whom payment was expected. And then other income. Examples include income on endowments, tax support, income on reserves, and gains and losses from sales of property.